Welcome to The Explainer. Today, we're diving into a truly fascinating turning point for Wipro, one of India's absolute IT heavyweights. We are unpacking their fiscal year 2026, and let me tell you, it paints a really complex, but highly calculated picture. On one hand, you've got these mixed financial earnings, reflecting a pretty tough global macroeconomic environment. But then, on the other hand, we're looking at a historic shareholder reward, timed perfectly with a bold, structural pivot towards an AI-first future. It's what you might call a classic corporate catalyst arc. We're going to break down exactly what the numbers are saying, how the mechanics of their massive stock buyback actually work, and what this long-term technological vision means for the whole industry. Here is our quick roadmap for today. Number 1, Wipro's FY2026 financial snapshot. Number 2, decoding the share buyback. Number 3, entitlements and investor impact. And finally, number 4, the AI native strategic pivot. All right, let's jump right into part 1, Wipro's FY26 financial snapshot, and taking a look at their current reality. So looking at the top line, Wipro crossed a really massive annual revenue milestone. For the full fiscal year, their revenue from operations grew to 926 billion rupees. That represents a steady 4.1% top-line growth compared to the previous year. In a business environment that's dealing with shifting trade dynamics and pretty tight global tech spending, maintaining that kind of growth and crossing that 926 billion mark, well, it really shows the sheer scale and the resilience of Wipro's underlying business. But when we drill down into profitability, especially looking at the fourth quarter, it's a bit of a mixed bag. Wipro posted a consolidated net profit of 3,501.8 crore rupees for Q4. Now look at the trajectory here. That's actually a slight decline of 1.9% year over year. But if we compare it to the immediate preceding quarter, it's a robust 12% sequential increase. So what we're seeing is a really strong short-term recovery, even if that annual comparison shows a slight contraction.
Now, there is a fascinating tension here between Wipro's short-term expectations and their long-term pipeline. On one side, management issued some very cautious revenue guidance for the upcoming Q1 of FY27, expecting growth to be somewhere between -2% and flat in constant currency terms. That definitely adds a tone of caution. But then, look at the large deal bookings during that exact same fourth quarter. They absolutely surged to $1.44 billion. That's a massive 65% jump quarter over quarter. So they are literally locking in major future work right now, even while near-term revenue generation is under a bit of pressure.
Moving on to section 2, decoding the share buyback, the immediate reward. Seeing the headlines, you've got to be asking yourself, why on earth is Wipro willing to pay such a high premium for its own stock right now? Well, it's a very specific strategic maneuver. It's designed to return surplus cash to shareholders while simultaneously shrinking the equity base. And doing that naturally improves long-term financial metrics like their earnings per share and return on equity. To actually pull this off, the board approved a mammoth 15,000 crore rupee tender offer buyback. They're looking to repurchase up to 60 crore fully paid-up equity shares. To put that into perspective for you, that represents about 5.72% of Wipro's total paid-up equity share capital. It is a massive, massive injection of capital straight back into the hands of investors. And this is exactly what created a stark contrast that totally captured the market's attention. While Wipro's stock was trading at roughly 177 rupees per share out in the open market, the company set their buyback offer price at 250 rupees per share. That is a whopping 41% premium over the market price. Now, it looks incredibly attractive on the surface, for sure. But as with any financial mechanism of this scale, it comes with very strict rules. Here is how the whole shebang actually works. First off, this is a tender offer route. That means Wipro isn't just randomly scooping up shares on the open market. Shareholders have to actively tender their shares through a broker. Second, and this is critical if you're watching this on or around mid-June, the June 5th record date to be eligible has already passed. Only investors who held Wipro shares on or before June 5th are eligible. You can't just go buy the stock today and tender those shares for that 250 rupee premium. The actual window to submit those eligible shares is open from June 11th through June 17th. Which brings us to section 3, entitlements and investor impact, understanding the mechanics. The structure of this buyback is designed to heavily favor retail investors. Indian regulations actually require a reserved portion for small shareholders, which is defined here as those holding Wipro shares valued up to 2 lakh rupees on that record date. For this specific group, the entitlement ratio is 11 shares for every 56 held.
That equals an impressively high acceptance rate of about 19.6%. Now compare that to the general category, the large institutional investors, who have an entitlement ratio of just 10 shares for every 197 held, which sits right around 5.1%. So the key takeaway here is that holding 100 shares does not mean Wipro is going to buy all 100 from you at the 250 rupee premium. If you tender your shares, Wipro only guarantees purchase based on your specific entitlement ratio. Any unaccepted shares, they just get returned to your demat account and stay linked to the standard market price, which again is around 177 rupees. So think of this as a brilliant tactical opportunity for eligible small shareholders to grab some premium value, but it is absolutely not a guaranteed profit on your entire portfolio.
Finally, Section 4, the AI native strategic pivot and Wipro's long-term vision. So to combat that market caution we talked about earlier, Wipro is pivoting super heavily into an AI-first future. As of April 1st, they officially launched a dedicated AI native business and platforms unit. And listen, this isn't just a shiny new product line. This unit is designed to fundamentally alter how they serve their clients, how they incubate new AI-led businesses, and how they scale AI platforms both internally and externally. I think this recent quote from Wipro CEO Srini Pallia perfectly nails the magnitude of this organizational shift. He said, "Advancements in AI are reshaping client priorities. To strengthen our position in an AI-first world, we are pivoting to a services as a software model." That right there is the core thesis of their future growth strategy. Now, services as a software might sound like just another piece of corporate jargon, but it's actually a massive deal. Traditionally, IT consulting was all about billing clients for human hours to fix problems after they happened, very reactive. This new model completely walks away from that. Instead, Wipro is selling highly automated, AI-driven business outcomes. They're talking about using AI to foresee and fix IT issues before they even disrupt anything. It's about offering proactive, self-resolving software systems with end-to-end accountability, instead of just supplying support staff. And they've organized this overarching AI 360 strategy into 3 really clear actionable steps within what they call the Wipro Intelligence Framework. Step 1 is Run AI, which is powered by their Wings platform to transform daily IT operations using intelligent agents. Step 2 is Build AI, utilizing the WIGA platform to bake AI directly into the software development lifecycle, heavily speeding up innovation. And Step 3 is Reimagine AI. This is where they deploy industry-specific platforms, like NetOxygen for lending or Chromize for cargo operations, to completely modernize their clients' core business processes. Of course, to pull off a pivot of this scale, you absolutely need a stable, highly trained workforce. Well, Wipro is actively training over 240,000 employees right now in AI literacy. And simultaneously, their attrition rate is dropping. It fell from 14.2% in Q3 down to 13.8% in Q4 of FY2026. So what we're seeing is a stabilizing workforce that is getting aggressively upskilled and ready for this massive transition. As we wrap up this explainer, we are looking at a truly fascinating corporate balancing act. Wipro is basically rewarding investor patience with this highly lucrative 15,000 crore share buyback, giving them immediate relief and a great tactical opportunity. But the real test is still ahead. So we have to ask, will this strategic blend of immediate capital return and long-term AI transformation secure Wipro's spot as a next-generation IT leader? Or does the execution risk of pivoting an entire legacy business model to an AI-native future just present too high of a hurdle? It's a multi-billion-dollar question, and it's one that is going to define the next decade of IT. Thanks so much for joining me, and keep exploring.